Hey everyone, welcome. Today is a big day. Today is the day that is essentially going to determine, in my opinion, what the Federal Reserve is going to do in terms of tapering. That is, the stopping of printing as much money into our economy and into our marketplaces. Right now, we're buying $120 billion per month worth of. Hold on, 120, wait, now I'm confused. Hold on. The 80 and 40 mortgage-backed securities. We've got, let's see here. Hold on. Purchases. Yeah, it is. Oh my gosh. Yeah, of course. It's incredible. $80 billion per month of Treasury securities and $40 billion per month of mortgage-backed securities. And you've got a lot of folks at the Federal Reserve that are like, hey, why are we printing all this money? This is crazy talk. Why are we doing all this? We're going to have hyperinflation, or we're going to have some inflation. There's a lot of fear about that in the marketplaces. And today is one of those days where we get a CPI reading, a consumer price index reading, and we get a little bit of feel for how much inflation is happening in the market. One thing that I think is really interesting is the consumer price index really only shows us how much inflation we've had in terms of prices actually going up. But one of the things that we're noticing is that in a lot of company earnings reports, the amount of inflation that is actually happening isn't completely getting passed on to consumers in the form of higher prices. That companies might only be able to pass on about half of those price increases, right? So if prices go up $10 for a certain product, but the company only actually raises prices $5, their costs went up 10 or whatever, then the company's losing five and consumers are losing five, right? So CPI would only be measuring half of that actual impact. So it's kind of interesting. But we are expecting inflation to rotate to the downside. Month over month expectations right now are expected to be 0.3, 0.4 or 0.3% month over month. Actually, 0.4% is the expectation. Here it is. And year over year, sitting at 5.4%. So let's see what actually ends up happening. This is pretty exciting. The CPI inflation readings come out right now in the next 30 seconds here. So we'll see what happens. All right, BLS inflation. Let's see what happens. So last month it was 0.5%, and that was in July. Now we're waiting for the August reading, and kind of excited about this. Last month over month, we were at 0.5%, and the year over year reading was 5.4. Wow, 0.3%. We matched. We came in at a match, 0.3%. This is actually not higher or lower than expected. It's out. 0.3, yeah, let's see, increased 0.3 on a month over month basis. After rising 0.5% in July, the Bureau of Labor Statistics reported today. Oh, the estimate was actually 0.4%. So that's actually a tiny little bit under on a month over month basis. Over the last 12 months, all items in the index increased 5.3%. This is right along expectations. I was hoping that this would have a 4 in the front because we're really waiting for the inflation to sort of inflect down here. So the energy index increased 2%. Let's see what else we got here. Less food and energy rose 0.1% in August. That's actually, I believe that was expected to be 0.2%. So that's tiny little. This is only a tiny little bit under what we were expecting. Let's look at some of the big numbers. All items here, 5.3% year over year, going into the whole of the pandemic. I really want to see some of the specific categories that we have here. So the index for new vehicles continued to rise in August, increasing 1.2% after increasing 1.7% in July. So you're seeing this slow, right? You're seeing this actually settle down a little bit. This is a good thing for the stock market, in my opinion. Look at this. In contrast to these increases, which increases here? Because this is the recreation index increased 0.5%. Not that big of a deal. Medical care rose 0.2%. Hospital services 0.9%. Physician services unchanged. Prescription drugs 0.4%. Personal care, communication, and apparel increased in August. In contrast to these increases, several indices declined in August. The index, well, look at this. The index for airline fares fell sharply, decreasing 9.1% month over month. We've actually seen this a lot, or we kind of expected things like this, where all of a sudden we would see. Rather than like airline prices going up 10%, 10%, 10%, 10%, or whatever, we would see some sort of decline of all of a sudden 7 to 8%. So this is actually really good. We're finally seeing that big fat decline, because remember, you can't keep going up 10%, 10%, 10% in prices. Like at some point you stop. And at some point when you revert down, you actually have deflation because you've just inflated so much. Used cars and trucks, look at that. Used cars and trucks declined. The Manheim Index predicted this. We saw this happening, that used car prices were starting to decline. The index for motor vehicle insurance fell 2.8%. Wow. Index for all food and energy rose 4% over the last 12 months. Index for new vehicles rose, what is this? The index for new vehicles rose 7.6%. Well, I thought we just had new vehicles here. The index for new vehicles continued to rise in August, rising 1.2% after rising 1.7%. And is this year over year? Oh, over the past 12 months. Oh, okay. Yeah. So year over year, these are the year over year numbers for new vehicles, up 7.6%. Okay. All right. Let's see here. All index for all consumers increased 5.3% over the last 12 months. Wage earners increased 5.8% over the last 12 months. Let's see. Chain consumer price index increased 5.1. Okay, I want to get to the table. Table. Okay. This always gets really interesting when we look at the table here. Okay. Oh, sorry, that's location. I want details. Here we go. Okay, this is always cool. Okay, check this out. You're looking at the very far right side, and you're looking at month over month changes. So flour went up 2%. Flour. Okay, beef and veal 1.7, uncooked beef 2.3. Here we go. Bacon 3.3. So okay, our meats got a little expensive. Well, some meats went down. I'm just looking for larger numbers here on the right. Negative 2.8% on peanut butter. Peanut butter's getting cheaper. That's it. Everybody stop buying salad dressing because it just went up 4%. Okay, I'm serious too. There are some. Oh, look at this! What is this? Food at employee sites and schools down 17%. Okay, but that's a low weight in the index. Window coverings, folks. You're getting ripped off on window coverings right now. Window coverings up 17.2%. Okay, 3.8% on living room, kitchen, and dining furniture. There goes Restoration Hardware to the moon. It'd actually be interesting to look up Restoration Hardware. Whoa, look at this. Previously, it was women's dresses were exploding. Look at this. 7.9% in men's suits. I guess people are like returning to the office, and all of a sudden everybody's buying suits again. So suits have inflation again. That's nuts. I guess during the pandemic, it was just like blazers. Now it also includes pants. Okay, motor oil up 3.8%. Jewelry is up 2.4%. 2.8% for sporting goods, including bicycles. 2.8% music instruments. Okay, we're just looking for big here. 3.3. There you go. A decline in lodging away from home. This was a big deal. Oh my gosh, look, rent of primary residence, only 0.3%. We were actually going to be looking for a big increase potentially in renting going up, in wages going up, in services going up. We're actually not seeing it. And we're seeing declines in those categories we expected, like lodging away from home. This was one of the categories we expected that was rising very largely. Look at this. Right here, you want to look here. These are some other month-over-month increases. 5.9%, 6.8%, right? We were on this inflationary trend, and all of a sudden it's a negative 3.3. So this is a good print. It's a slight miss on the print. The year over year is still stable at 5.3, which I was really hoping for it to decline. Okay, let's see. Oh, look at that. Oh man, look at this one. Car and truck rental, 8.5% to the downside. Good. Good, good, good. Seeing those numbers come back down. Oh, here we go. Public transportation down 5.5%. Airline fares down 9.1% month over month. Good. And delivery services 1.4%. Services, another thing you want to pay attention to. I don't see any massive increases here. This is way better than expected. Uh, uh, it's again, I was really hoping for a big inflection on the top line, that 12-month number to come down. But the fact that month over month we missed, we were expecting 0.4 is what the market was expecting. We came in at 0.3 month over month, which is good. We saw lodging fall, airlines fall. We didn't see services go up. We did not see uh, airline or rents go up in terms of CPI, at least. The CPI rent measure, by the way, is like really, really weird. It's like the owner's equivalent rent, which is like bizarre. It's what landlords think they can get for rent. It's very, very strange how it works. Hold on. We should also look here at. I'm gonna go here for a second. Let's see. This is just localized. Okay. Consider yeah, actually, I think we don't have to look at these other charts. We did pretty well here. Do like to see when this data was collected. Let's see here. Mm-hmm. Okay. I don't know that I'm going to quickly be able to find it. March. Oh, that's okay. Okay, wage earners and clerical workers. Okay, that was year over year. The index rose 0.2% prior to the seasonal adjustment for the month. That's an interesting note to look at as well. See, the consumer price index for urban wage earners and clerical workers, we were expecting this to go up, increased 0.2% prior to the seasonal adjustment. It's incredible. Okay. All right. The shelter index increased 2.8% over the last 12 months. Right. That's over the last 12 months. I'm caring more about the changes in the month over month data. This is a good print. It's certainly not a runaway inflation. In my opinion, this is enough to very likely put the nail in the coffin of a Federal Reserve taper, that $120 billion per month of federal money printing. I would expect this to allow or enable the Federal Reserve to keep printing at least until November before we have to taper. Let's see what CNBC has to say about this. What do they have to say for themselves?
In terms of commercial airplanes and demand for those. Now, this is the global fleet today, or actually in 2019, before the pandemic, 25,000. It's essentially going to double.
Okay, let me just look at. I'm going to look at Bloomberg here really quickly because CNBC is just talking about boring things. Okay, well, yep, those looking for signs of easing price pressure, me, got their wish. Both headline and core inflation rose less than expected. The details are a little slow in coming, but it's kind of notable that housing inflation was once again 0.4%. Where did they see that? I'm going to pull that up, that 0.4%, because what I'm looking for, I looked at real estate. So I think they created kind of their own sort of merger here. But that is a big one that we're looking for. Rent of shelter. I have rent of shelter 0.2%, rent of primary residence 0.3%, housing at school 0.2%. I don't see how they're seeing 0.4%. Maybe they put something together themselves. It looks like transportation was a major driver of the downside surprise. Not only were used cars down 1.5%, but transportation services fell by 2.3%. Is this evidence that inflation is transitory? Well, that probably depends on what you thought before 8:30. That's a good point. It's like, did you think it was transitory before or not? Like, is this really going to change your mind? But no, this is good. Stock futures jump after CPI miss. Yeah, CPI may be a political indicator. That's true. This has a lot of implications for the stimulus package, the large infrastructure package, and how large it actually ends up being. Crypto kind of fell on this news, which you would expect. I've said many, many times, and people kind of get weirded out when I say it. I don't understand why, but people are like, "Oh yeah, When we have slower inflation, crypto tends to fall, or that people, how do I want to say this? People invest in cryptocurrencies as an inflationary hedge. But anyway, let's go ahead and look at the market here. So we don't have that crazy kind of runaway inflation. Look at this. Redfin just bumped 3.9%. I wonder how much of this came from. Not much actually came from now. Well, it's hard to tell exactly where we are now. 40, we're at about 49. Yeah, a tiny little bump came out of the CPI there. We've got Hut 8 Mining is up. Playboy Group, these are all in pre-market. Crypto did go up through the night. Coinbase, and we'll look at crypto in just a second. Coinbase, Build-A-Bear. Okay, I don't really see massive moves here. We could look at the minute to chart here. Tesla. So look at Tesla, for example. Tesla apparently looks like it was negative, or getting ready to open towards the downside. So we had a nice little pop here of about, 0.6, 0.7%. So you kind of see a little bit of this reaction here of stocks. Yeah, here's the S&P 500 rotating up about 0.5% is what you really got here. You went from a slight negative to a slight positive, which is great. But yeah, this wasn't like a massive miss. I was really hoping for a year-over-year number in that 4% range, some kind of larger decline. But that's okay. Anyway, this is good. Look at that. Hippo 561. Let's see how's our buddy Affirm doing. What? Which company? Affirm. Yeah, no, which firm? Sorry, that joke is never gonna get old. It's great. I love it. Oh, look at that. Why is Wynn Resorts down 7%? It has nothing to do with inflation. It looks like something happened between market close and now. Oh, yeah, sorry. There we go. I heard I was too low. Is that better? All right, hold on. Let me see what's going on with Wynn. Win Resorts. You are losing, not winning. Sorry. All right, looking at the yeah, I have a specific level I usually set us to for the live streams, but I had it. I record at, it's so annoying. I record at a lower level than what I do the live streams at. Okay, so Las Vegas Sands among the pre-market, Las Vegas Sands, Lucid, and Wynn among pre-market losers. There's nothing particularly that I see in terms of why Wynn Resorts would be down like this. Macau to increase government supervision of of casinos. I mean, I don't really see. I don't really see a reason here. All right. Yeah, it looks Open Door. Open Door down 5. Oh, well, Open Door and MP Materials. These two voted to allow more shareholders to sell shares from the SPAC. There's a rumor that Chamath is doing another SPAC, and so he's trying to allow people to kind of sell. Let me look at Lucid. I don't think there was any Lucid news. I was looking at Neo a lot yesterday, but let's see here. Citi and Lucid community bullish on Lucid amid Morgan Stanley's underweight rating. Will Lucid motor stock recover? No, I don't really see anything here. Lucid Group gets new underweight rating by Morgan Stanley. $12 price target. Oh, well, there you go. Actually, there is news for Lucid. Morgan Stanley and their rating. Today is also Apple Day, which is crazy. We're gonna last week, I was going to make a video on why I thought it was sus that Apple had not yet announced an event. I'm like, by this time of the year, they've already announced an event usually. Like, where's the next iPhone? Are chip shortages going to stop Apple from announcing a new phone? That's what I thought. And literally an hour after we started planning the video, Apple announces. It was crazy. Hey, well, worth mentioning at the moment that you could get up to $70 totally for free with public.com. Go to metkevin.com/public. If you go to metkevin.com/public, you'll get that $70 or up to $70 for free. They don't buy or sell your information, and they do not use payment for order flow. So check that out. Link is down below next to the coupon code for the amazing programs on building your wealth, from making YouTube videos, being a real estate agent, doing property management and rental renovations, being a real estate investor, or our favorite, stock, crypto investor, fundamental analysis, technical analysis, options, you name it. Check it out. Link down below. Use that coupon code before the 24th. Today is election day, by the way. All right. So let's do a quick little recap here of what we've got in terms of CPI. Personally, just sort of briefly here, I mean, I'm very happy. Like, I think this is great, and I think this could really. This means the Fed should be taking the foot off the gas. We've got the Fed meeting again here on the 22nd, and I think they meet on the 21st and the 22nd, but they talk to us on the 22nd. But yeah, okay, let's do a quick little recap here. All right. Okay. So quick recap for those of you just now joining on what the heck is going on with CPI. We had expectations that consumer price index, our measure of inflation, which we know doesn't necessarily hit everything, because if manufacturers can only increase prices 50%, that means inflation could, in theory, in some places be twice as much as it really is, because manufacturers or are not able to pass price increases along to all of the consumer products like cars or computer chips or even services or whatever, right? So there's sort of a restraint on how high inflation could actually come in. But we were expecting inflation to come in at 0.4% month over month. It missed that number. It came in at 0.3% month over month, which is very, very exciting. We're seeing a little bit of that inflection downward. Year over year, we came in at 5.3%. That is slightly below the 5.4% expected. Not that exciting on the year over year number. I was really, really hoping to see something in the 4%, but I also knew I was kind of shooting in the dark, just like crossing my fingers, like something please tank, because it would just lead to a stock market rally. We did get a small rally of about 0.5% in the S&P and the Dow afterwards. We saw things like bacon getting more expensive, window coverings getting more expensive, but airline, travel, lodging, and used cars falling, in some cases substantially in this month, which was great. We also saw women's dresses go down 3.1%, but men's suits skyrocketing. We had, let's see here, airfares down 9.1%. Suits, for the reference, were up 7.9%. Owner's equivalent rent came in at a 0.3% increase month over month, which is not horribly fast. It's 3.6% annualized year over year, which is not going back. That would just be at an annual rate, right? And that's not horribly unexpected while you've got a top line number at 5.3% of overall inflation. So not so bad there. Lodging away from home down 3.3%. And the used car down 1.5%, as well as rental cars being down 8.5%. These were things that really weighed on the reading this time. We're still not seeing services go up as quickly or as expensively as we thought, because remember, as we knew that car prices and travel costs and airline travel, fees, fares would start declining. We knew this would happen, but we thought that there was a risk that while we started to see those decline, we would see those declines propped up by things like higher rents and higher wages, leading to higher service prices. But we didn't actually see those numbers come in higher than expected. It kind of came in line with expectations. And so when we saw that decline in air travel, lodging, used cars, we ended up getting the index coming down slightly, missing a little bit. So overall, this is bullish for the stock market. I believe we're going to continue to see the Fed printing their 100 $20 billion per month. That's for $40 billion per month in mortgage-backed securities, supporting the real estate market as if it actually needs any support. $80 billion per month in Treasury bond purchases, as if the Treasury market actually needs people to be buying more bonds right now. Let's go ahead and actually take a look at the 10-year Treasury yield. I would expect with a miss it to decline. Let's see if it went under. No, it actually didn't. You've got this weird conundrum happening with the Treasury yields. I'm going to give a very brief explanation of this. But Treasury yields actually went up a tiny little bit, 1.336. Let me pull up the minute by minute chart here. While I do that, it's worth noting that it's so weird. There's talk that short sellers are getting rid of their treasury shorts, and so they're basically, rather than, short seller usually sells bonds, right? So now they're buying the bonds back. When they buy the bonds back, price goes up, yield goes down. But when they stop becoming buyers because they're done, they've covered, now you have less buyers in the market, and yields can actually trick up, which is kind of weird because it's like, at the same time you would be expecting the Treasury yield to kind of come down. It's kind of like stable or up because you've got less buying pressure on bonds, and that's because the short sellers have covered. The dynamics of that really weird, inverted. But all in all, once short sellers have covered, it essentially means that Treasury yields could float a little higher than some of the lows that we've seen, and it's a good thing, in my opinion. So overall, this is great. Bloomberg ran an article this morning talking about how fear is coming back to some degree in marketplaces, and how that's actually healthy. How having some reasonable level of fear rather than just euphoria can ironically actually help prevent a fall of the market, that we could prevent some form of correction by actually maintaining or a healthy level of fear in the marketplace. So let's see if we can actually pull that up. Let's see, consumer. Of course, that's the headline. Let's see, where was it? Fear. No, I can't find it anymore. It was earlier this morning. So, but anyway, I gave you the gist of it. So I think it's fascinating. This is very good. I'm excited. And it definitely makes me want to remind you to get your free stock with Public. Go to metkevin.com/public, get up to $70 for free in stocks with Public, metkevin.com/public, and check out the links down below for the programs on building your wealth. All right, let's get back to the sticks and see what we got happening in the markets. So HUD 8 477. Oh, that's interesting. This is risen a tiny little bit here. That is interesting. I'm going to look at crypto in just a moment. Redfin 3.9%. I wonder if there was news on Redfin or what's pushing Redfin. Let's pull that really quick. Redfin. There's no healthy level of fear. Fear compounds into pandemic. No, I mean, maybe for individuals, but you got to consider the market as highly diverse, right? There are a lot of people who could have fear, while at the same time there are a lot of people who could have no fear, or could literally have euphoria, right? And so it's that average of this. HUD 8 up with certification news. Oh, thank you very much. It's funny how you can be excited to see inflation at 5.3% because you're not a little person like us that are feeling the inflation on a daily basis. Yeah, well, I disagree with that. See, I think a lot of this reading is certainly food, which I do agree with you that food, everybody feels that. But some of the things that prop this index up, like window coverings or suits, like how many of you have really bought window coverings? How many of you have really bought a used car? How many of you have bought suits or whatever these things? It's not like every month, in my opinion, you're going out and buying exactly the things that are now more expensive. So this is a broad index for the entire economy as a whole. It's kind of like people are like, oh, how could you hold cash? Somebody left me a comment the other day because some of I talked about RCC, real estate cash crypto, right? For while I wait for opportunities. And they're like, how could you have money in cash right now? You just lost 5.3% over last year. I go, no, I didn't. Like, my cash did not lose 5.3% over the last 12 months. That's because the consumer price index is an index of things that did get more expensive. But if I'm not buying those things, then my cash did not lose 5.3% in purchasing power, right? In fact, I would argue that in some cases I have seen deflation where I want to be purchasing and using my cash for. That's because I'm looking for opportunities in the stock market. And some companies have actually gotten cheaper over time. So my cash has gotten more valuable relative to the things that I want to buy. So it's very difficult to just, for us to, in my opinion, in all reasonableness, look at the headline numbers for inflation and say, oh my gosh, my money's getting diluted by 5.3%, when the reality is you're not literally losing that. It's a totally different. So it's worth noting that. No news on Redfin. A glitch on, somebody says it's a glitch on Weeble. Really? Let's see here. All right. Yeah. Well, no, you're right. There is no news on Redfin. So, all right. What else do we have? Do you think crypto is reacting to CPI news? I don't know. I haven't looked at it. Let's go look at it together. So with this miss, I would expect crypto to soften a little bit. But crypto does weird things. BTC USD. Oh, well, that's interesting. It actually ticked up a little bit. Wow, I'm surprised. It's possible. It's possible that the market, crypto here, could be reacting to headline of, oh my gosh, it's 5.3%, right? Even though it's slightly less than expected, it's still a high number. So that just goes to show, like, the market can be unpredictable at times in terms of what exactly it's reacting to. But yeah, look, it did have a bump here. You actually fell a tiny little bit going into the CPI print, and then you immediately had a bump of almost 800 points here. That's fascinating. Wow, that's a weird reaction. Yeah, well, it's fine. That's possible too, that crypto's more reacting like a high risk tech stock and going up because of it. It's also true, but I still think there's a risk that if inflation goes away substantially and we get a larger decline than expected, there could be some pain in crypto if people are removing their hedge. Although I doubt one CPI report is going to change anyone's mind who's investing in crypto, especially since I feel like most crypto investors don't believe the CPI report as far as they can throw it, which is not a compliment to the CPI report. So I think it would take quite a while. Yeah. Let's see here. Okay, let's see. Likely to see a taper delay after today's numbers. End of year rally starting to. I would not be surprised. I think so. The bad thing is food prices won't be coming down. Possibly. I mean, some things come down. Like here, I'll give you a diet where you could go down. Okay, you ready for this? You ready for a diet? Here's your inflation diet. All right, here we go. You're going to eat fresh biscuits, rolls, and muffins because those are down 1.8%. After you get your fresh biscuits and muffins, I want you to get not pork chops. Okay, stay away from pork chops because those maintain their price. I want you to go for Frankfurters. Frankfurters right now are down 8.3%. So you're going to have biscuits, Frankfurters. This is what you're going to eat. This is your inflation diet, okay? Frankfurters, biscuits, and rolls. You can actually get yourself some frozen fish, 1.9% decline. And in fact, if you want to get fresh fish, no, you're going to stay away from fresh fish. Fresh fish is up 0.5%. You're going to get frozen fish because that's down 1.9%. Then you're going to get apples and bananas because those are down 1.5 and 1.1%. You're going to stay away from other fresh vegetables, though. Stay away from those because those are up 1.2%. You should also get rid of the coffee. Coffee is up 1.4%. No more coffee for you. So instead, for your inflation diet, you're going to go for fresh, non-carbonated juices and drinks. So you're going to get some OJ because it's down 1.8%. Whatever you do, stay away from instant coffee, though, okay? Because instant coffee is up 2.7%. So no instant coffee. You're better off having roasted coffee if you're going to get coffee. Definitely stay away from margarine and butter, because margarine's up 2.7%. Instead of using butter or margarine, you're going to go for peanut butter. So Frankfurter's peanut butter and juice, like orange juice, apples, bananas, this is going to be your inflation diet, okay? You're allowed, oh yeah, and frozen fish, not fresh fish. You are going to stay away from soup. The soup is up, so we're staying away from soup. And condiments, no more ketchup. That's 3% inflation. That's way too much. You're staying away from that. But you can have prepared salads. Prepared salads is okay. But salad dressing is up 4%. So you can have a prepared salad, but do not add any dressing. Okay, that is your inflation diet this month. Okay, next. All right, so let's see. Then we've got FCell all of a sudden bumped a little bit. Look at the price of uranium. I don't know, like all the inflationary diet plan. There you go. There's so much obsession with uranium lately. Uranium. Who's got the ETF? It's the same company that does the silver. What's the ETF called? Who did the silver? Silver ETF. What was it? Because it's the same company. Don't forget to tell people to buy your course before you increase the price another 5.3%. That's right. Don't forget to buy the courses link down below before we're forced to raise prices because of all this inflation that's happening. In fact, there's a line here in the CPI reading, meet Kevin's courses, 5.3%. I mean, that's crazy. Like the inflation there is pretty high. So do check that out. Okay, what's the URMN? Is that it? Oh, earnings today for FCell. Okay, URMN. North Shore Global Uranium Mining ETF. That's a different one from the one I think I'm thinking of. But URMN. Yeah, it sounds crappier. Yeah, that's definitely a pump there in pricing. My goodness, look at that. So take a look at this. This is going out here to 5 years. If you go to the August low of August 20th on uranium, you are up about 78% on uranium right now. Uranium is growing into the next big ape play by Wall Street bets. Oh my goodness. That's crazy. Sprott trades as SRUF on the OTC. Sprott? I don't know what that thing is. Sprott Gold. Oh, Sprott. Oh, they do the uranium. That's right. Oh, you're right. Okay. Now I know what you mean. SRUF. SRUF. The explosive uranium squeeze. Oh my gosh. Very bullish. SRUF. That's nuts. How come I can't get the SRUF price? Give me like, oh, there we go. Sprott Physical Uranium Trust. Wow, look at that, 56% year to date. Yeah, I mean, I don't do materials or commodities, but that's cool. That's good. That's better than Tesla did, and it's uranium. Look at this, ATER dropping a little bit here. ATER. It's kind of like you get those 1 day pushes, right? Afghanistan was full of uranium. Oh, that's interesting. There's a company, but I saw that as well. I think there's one of those companies. They do a silver ETF as well. I think they bought like 25% of the supply of uranium or something crazy like that. Yeah. There's a company that's just like YOLOing. Hey, I mean, good for them, I guess, if they can get their hands on it. Support.com's going down 2.2%. Faraday Futures down a little bit. Lordstown Motors down a bit. AMC down a little bit. NEO down 0.25%. Teladoc, Arcimoto, Tesla rotating down 0.09%, along with Etsy, Airbnb, Target, Fastly, Palantir's up a tiny little bit. SoFi stuck at $15. Can't move, won't move. Tattooed Chef and the Lemonade up fractionally. What else? Where's Hippo? When's Hippo gonna run? Is Hippo gonna go back to $7? We're gonna go back to the moon? I think $7 gets a little stretchy, but there's easily $1 in Hippo right now, which is kind of big given the price of Hippo. Anyway, Enphase up 1%. Let's see, Fisker, Redfin. Where's Hippo? Hippo 2.36%. Good Hippo. All right. Those CPI numbers are cooked by the Fed to fit their narrative. If you lose today, I hope you won't be crying to say the numbers are skewed. I won't be. I already said I'll accept the election. Yeah, I don't really believe it. I mean, look, I've become very jaded because of what I've seen in politics. But I don't know that they have to cook CPI numbers, and certainly the Fed has nothing to do with it. It's a totally different department. Who knows? I mean, there could always be shadiness, and I'm sure there's always some degree of disaster happening everywhere. But I don't know. I think the CPI is thorough. I think there's something's broken with it. Like I think owner's equivalent rent is kind of stupid, but I'm optimistic on some things. So let's see here. Okay, let's see here. All right. So what else we have? FCell's really running here all of a sudden, leading into earnings. It's up 9% at the moment. This is one of your few runners. That's FCell right here. Let's listen to CNBC. We haven't really given them a shot here. Let's give them a chance. What does Jim Cramer have to say? Jimmy, chill.
What will actually occur? Okay, you can keep writing op-eds, but at some point you're going to have to actually make a reg, do something. Right. I mean, he goes on to say he doesn't believe China-related companies currently are providing adequate information about the risks they face. Okay, what are you doing about it?
Well, the difficulty I have is, again, there's two issues to the Chinese, and you can see this with Win trading down today, which is a new rule promulgated that may actually hurt how the casinos are judged in. This is the so-called nanny state that my colleague Ben Stoto has been talking about.
Boring. Thanks, Braden. I appreciate that. Don't shoot the messenger. CPI. Okay, let's see. FCell. Oh, they just reported. Oh. Okay, I thought it was after hours. Maybe that's why they're running. Let me look at FCell. I mean, I guess I could have looked it up, but I didn't. I mean, it's a hydrogen play. I think it's ahead of its time, but it has sold a lot. Or, I'm sorry, it's sold off a lot. The stock, that is. So, okay, what do we got? FCell EPS comes in with a loss of 4 cents, beating expectations of a loss of 5 cents. We have sales beat estimates as well. Revenue coming in at 26.8 million versus 8.7 a year ago. Okay. So a little bit better. Oh, here we go. I found the fear article. I heard you mentioned on NPR during my morning commute. Oh, that's awesome. Sweet. Thanks, man. I like NPR. They're, in my opinion, one of the publications. They're not like the LA Times. LA Times and their bias. NPR is a little better. This was the article I was reading. Wall Street fear gauges are sounding some alarms after the S&P 500's worst week in almost 3 months. That's actually a good sign for the bull market, according to Sundial Capital. While options trading shows implied volatility has climbed, the actual level of price swings is easing. Investors are paying up for options on concern about risks such as less generous monetary policy and the impact of COVID-19. Blah, blah, blah. Okay. Underscores an argument for a bout of nerves in the market, potentially positive for the development of stocks because it highlights a lack of exuberance that precedes major drawdowns. Yeah? It's good. I like it. All right. Tweeter. Yesterday, some people got triggered because I wrote a tweet that apparently was triggering to some people. So since it was triggering, I'm going to put it up right here because why not? What do I care? Let's see. Get triggered. Get triggered. I wrote this. Do not buy a Tesla. Buy TSLA. Ooh. I got so many people like, oh my gosh, Kevin, well, if everybody listened to your advice, nobody would have Teslas, and then the market would crash, and your stock would crash. You're stupid. You should be doing both. No, you shouldn't. Whatever. All right. So, what else? Let's see here. Okay. Okay, BTC falling a little bit. Look at it. It's always within the lines. It's crazy. It fell a little. Well, I guess not always. Fell a little bit earlier. But then again, this is the minute chart. Let's zoom out a little bit. Yeah, there we go. It's been playing this channel fine. I gotta add a line over here somewhere, but I'm not going to. I haven't changed my lines in a while. But anyway, yeah, really hanging out roughly in this channel here on BTC. Let's look at ADA. Same thing on ADA. It's the same pattern here. Okay, waiting for the second version of the Cybertruck. Why, you don't like Windows Service Pack 1? You're waiting for Service Pack 2? The same thing. People get mad at everything these days. Facts. You know, I'm actually a little offended the way you wrote that. Like, who's people? I'm just kidding. That's inclusive. What if I don't identify? I'm not people. Oh, yeah. All right. So we've got the market 17 minutes away from opening up. And good, just overall good news. I mean, the CPI is good. You know, some fear being healthy in the market, which is good. Hippo's almost up 3%. I mean, folks, at this point, it's like, where's the martini? Like, things are just going good today. You know, this is great. We got Apple releasing a new iPhone today, so we can go, you know, blow more money. Although I did something I always, when I was younger, hated, which was having monthly payments, but I got that iPhone upgrade program. I actually think it's very convenient because the phone does kind of start, I don't know, like things get slower after a while. But it's also, that might just be a justification for having the latest thing. But then again, you make YouTube videos on it, which I do when I travel. Kind of worth having the new crap. I guess it depends what your needs are. But we'll see. Yeah, exactly. It's true, Luke. You're right. You're right. Look, don't listen to me, okay? I'm the guy who's saying don't buy a Tesla, buy TSLA, and I have 2 Teslas. You know, so don't do as I say, not as I do. Yeah. Planned obsolescence. I believe that. Yes, the iPhones are designed to decay over time. I very much believe that. Yeah, I heard this too about how they were delaying the iPhone performance or slowing it down to preserve the battery. Yeah, no, that was shady. I remember thinking that was just a ripoff. Like, I don't care about the battery. Burn the crap out of the battery. Keep my stuff fast. You know. So yeah, that was shady. So I'm glad that came out. I'm sorry, Lauren. I'm very transparent about that. You know, I don't want, for example, I don't want somebody buying like my courses thinking, oh, Kevin's going to teach me about commodities. I'm not going to teach you about commodities. I'm sorry. So, oh, thank you. First stim package. Whoa, what a journey it's been, huh? That's crazy. I remember just the other day, I was looking at some of my old thumbnails, and I used to set up a tripod outside to do those thumbnails outside. That's crazy how things have evolved. All right, we're 13 and a half minutes from the opening bell. Let's see what other news we got here. All right. Okay. So, yeah. That's crazy. All right. So let's go ahead and go back to the sticks here, and we'll see what we got. CNBC's on commercial. Everybody's on commercial. Well, we can also look at a little bit of news. Hippo, 3%. Come on, Hippo. Start rallying today. ATER's down. ATER's down, so you can come over to Hippo. Bail out of ATER. Come over to Hippo. All right, so let's look at some headline news here, other than CPI. We've covered CPI enough. Yeah. Oh, really? Old iPhones run faster if you set the country to France because they have laws against it. Oh, that's brilliant. That is brilliant. Somebody here says, I buy Apple shares, but not their product. There's someone I know who buys Google shares, but will not use their product. Goes out of the way to avoid Google Maps, Google.com, Google Calendar, Gmail. All right. So ARK drops out of the top 10 ETF issuers as shiny object lure fades. Oh, that's a nasty title. Oh, that's so nasty. And Kathy reads Bloomberg. After vaulting up in the ranks of US ETF's leaderboard, ARK Invest is starting to slip. With about a $42.4 billion ETF collection, Kathy Wood's firm now ranks as the 11th largest issuer. Womp, womp, womp. Look, I like Kathy. It's been a rough month. What does this cynic say? Hold on. While ARK mania may have died, ARK is alive and well at more than 40 billion. I mean, that's also true. But the shiny object has faded. Let's go to Barron's. 12 minutes to market open. Shiny object. Yeah. So too bad YouTube is also. I agree. I like. Don't get me wrong. I like. What's it called? Google. I'm not. Can I say I'm not paid to say that? I think I could say that because I'm not paid to say that. I might be paid by Google, but I'm not paid to say that. Inflation cooled last month. It's still running a bit high. It's just an interesting title. Growth slowdown goes beyond Delta variant. Yep. Central bankers must choose, kill inflation or keep the recovery alive. Oh, they'll keep the recovery alive, all right. 3M has an inflation problem. The stock is dropping. 3M was such a, it's actually MMM stock. Imagine that, 3Ms. But anyway, they were such a great stock during the pandemic. Oh yeah, but yeah, recently they've just been shaving. It's still up 7% for the year. Year over year up 10%. Yeah, that doesn't surprise me to see a little bit of that cool off here. 10 minutes to the market open. Stock market is rising after inflation data. Apple is advancing. Coinbase is rising. And what else is happening in the stock market today? The Dow Jones Industrial Average was poised to rise Tuesday, while global stocks were mixed after a release of key U.S. inflation data. I should have this up where the camera is, and then just read it like it's my script. Futures for the Dow Jones Industrial. But then it goes all weird here. Barron's does this. It starts like bouncing around. Ugh. Let's fix that here. There we go. No, it's still doing it. Oh, it's all ruined now. Here, let's go to Google Chrome and make this better. Yeah. Oh, but now I have to sign in. What crap. This is what I get for trying to mess around. That's all right. We'll get into. I'll just look at it from here. Who cares if it bobs around a little bit? All right. Futures for the Dow Jones rose 0.4% and reversing 5 consecutive days of losses. S&P up 0.4%, NASDAQ up 0.4%. The stock market was celebrating the benign inflation report. I think that's a good way to reference it. That is just a benign report. It's not like we had a massive decline here. It was a slight miss. Small caps are cheaper than large caps. Why investors should care? We'll check that out in just a sec. Inflation has been central to the market's narrative over recent months about whether or not it's transitory. Commodity markets like oil prices moved higher as the crude rally continued. This is something, by the way, that Kathy thought would not happen. And I don't know over what time frame, but she was really expecting oil prices to go down, which they did go down for a period of time, but have since come back up. Luxury stocks were all lower after analysts noted concerns over rising COVID cases in Asia. Consumers in China, Japan, and other countries are critical to companies like LVMH, Burberry, Kering, and I don't know, whatever this other company is. Apple stock was up 0.6% in the pre-market ahead of the launch for its new iPhones. Oracle stock falling 3.4% after a report beating earnings, but having sales below expectations. Coinbase more than 1.9% higher in pre-market trading. Let's leave a comment. YOLO. I did it. Upvote. All right, next. Small caps. All right, let's see what we got here. The larger the company, the pricier the stock these days. The top 200 stocks on the U.S. stock market go for 22 times their expected earnings. Yeah, there's a lot of safety. Yeah, I think the casino stocks dropping has to do with the Macau news. I'm not. That's my guess, because there was some more regulation coming into Macau. SEC chair expected to talk about crypto today. Yes, he is testifying before the Senate at 7 a.m., which is crazy. That's in 37 minutes, and we've already been streaming for 55 minutes. That's what happens when you start at 5:27 or whatever we started at. Anyway, where were we? Finally, a YouTube picture-in-picture. Oh, what? Your app finally has picture-in-picture? MGM done? Yeah, all the casino stocks. I'm pretty sure it has to do with the Macau news. More regulation out of Macau. Anyway, so what do we have here? B of A Securities says that what do we got here? U.S. Large caps are expensive. Mid caps, on the other hand, trade at a 30% premium to their long-term average. Small caps stand at just 9%. The setup points to superior returns for shares of smaller companies than larger ones going forward. Long-term investors might consider increasing the weight of small caps in the equity portion of their portfolio. Ooh. Oh, that's interesting. Apple slowed down the CPU in relation to the life and capacity of the battery, so it wasn't all bad for us in cold climates like Norway, so it didn't turn off. Now you have a choice in the battery settings. It's a good excuse. Probably an hour after that. I think you get results coming in at 8 p.m. What's your plan on China stocks? I'm not very enthused about China stocks. Yeah. Sorry. Valuation isn't a catalyst, goes one Wall Street maxim, but over many years it can still predict long-term performance. B of A calculates the historical PE ratio. I've explained 80% of 10-year returns for large caps and 50% for small caps. That's fascinating. So less correlation in PE ratio for small caps. Large caps, pricey stocks suggest a negative 1% return annually over the next decades. Oh wow, that's not good. Expecting slow growth for the large caps. That's an interesting comparison, though. Looking for basically small caps versus medium or large. Let's look at the exact definition here, because what is it like? Under 2 billion, over 10 billion, things like this. Small cap versus mid cap. Here we go. Mid caps are those between 2 and 10. I knew I was right about those numbers. So mid is between 2 and 10. Small is below 2, and large is above 10. So Affirm is a large cap. Lemonade Insurance is a mid cap, and Hippo, I'm pretty sure, is a small cap. Oh, it's at 3 now. Okay, so it's just barely a mid cap. Yeah, little baby Hippo. All right. So we'll look at some more news here in just a second. Quick reminder, go to metkevin.com/public, get a free stock worth all the way up to $70. And check out the programs linked down below for programs on building your wealth, from property management, real estate investing, being an agent, making YouTube videos, to the stock market, stocks and psychology of money. Big one. Get all my buy-sell alerts anytime I buy or sell. It has to do with options, crypto, everything. So, that ADA dip, though. Look at that, 135 or 235 here. Be really cool to see it back in the dollar range. I remember buying this a couple months ago at $1, and I'm like, is it gonna go down under $1? Is it gonna break the buck? Never broke the buck. Not recently, at least. All right. Looking at the downside here, ATER really selling off in pre-market as traders moving up or moving out here. Somebody says Rocket Lab's trying to make a comeback. Here's another momentum mover here recently, 2.99%. Yeah, a little bit of an attempted rebirth here. Open Door, Lucid. Okay, Arcimoto. Let's see what else is moving here. How's Ocugen? There's talk that Ocugen might try to make a move this morning. Nope, not really. No move there on Ocugen. F-Cell after earnings, HUD 8, Hippo 2.5, Build-A-Bear. Come on, Hippo. What is this? How is it right after I read 2.5 on Hippo, it moves to 1.6? It's just like this instant adjustment. Lemonade's up 1%. Square coming back a little bit, back to 248. Cool. All right, let's look at some other headlines. What else do we have? Let's see. Let's go. Let's see if The Economist is covering this. All right. Is Hood getting cheaper again? Yeah, no kidding. Okay. So what do we got over here? Go away with your exemplary special here. Is America Inc. getting less dynamic, less global, and more monopolistic? We test 3 prevalent. Okay. Russia holds the largest military exercise in Europe. Why do they make this look like there's a laser beam coming out of this building over here? Tracking space debris is a growing business. What a weird front page here on The Economist. Let's try the Journal. Yeah, AOC is really good at getting attention. Like that was trending on Twitter yesterday, the tax the rich dress. She's really good at getting attention. She knows exactly. She's willing to burn the few. In this case, obviously the 1%, which is fine. Like everybody wants to burn the 1%, and really stand for that, the populist movement. Very smart, a very good political strategy. Okay, inflation. Facebook knows Instagram is toxic for teen girls, company documents show. In its own in-depth research shows a significant teen mental health issue that Facebook plays down in public. Wow. Here's a big expose. 20 seconds to the bell. All right. Let's go ahead and get the bell.
They're going to pull away again. And pulling away on same day is something we all really want as customers. And makes me feel that Prime could raise price for that product.
It's definitely where the battle is increasingly. There's the opening bell on the CNBC real-time exchange at the big board, Intrinsic Exchange Group, and the NYSE celebrating the launch of natural asset companies, a new asset class of sustainable enterprises. At the NASDAQ and Sport Radar, provider of sports betting and sports entertainment, celebrating its IPO. Michael Jordan among those ringing the bell. We'll talk to the CEO in a little over an hour.
Getting crowded.
The space?
Crowded space. Yeah,
sorry.
crowded space. I know that people at Penn National are talking about how, because of David Portnoy, they don't need to do a lot of advertising, cost of acquisition. But anybody who's watching their emails this weekend, you would see like if
all right, we're gonna jump back over to see how things are actually opening here. Give me 1 second. Just trying to get rid of this thing. There we go. Here we go. Finally. I had to get that AOC banner off. Okay. There we go. So let's see how we opened up. Kind of as expected here. Yeah, we've got fuel cell moving up. Well, actually, I think it may have just ticked down a tiny little bit here. Yeah, starting to rotate down a little bit. It's almost like the trader excitement after earnings wearing away here. Coinbase up 1.75%. Looking at the downside, ATER getting smacked. Oh my goodness. Look at that. This is it's so weird how quickly people are taking profits and momentum movements these days. Like momentum movements used to be like they're here for 2 weeks. They're here for 3 weeks. Now it's literally turned into this speed of we're up on a day, and then it just gets burned pretty quickly. It's incredible. So yeah, watching this kind of burn a little bit right here, sitting down 15%. I'm also though watching Wynn Resorts. Wynn Resorts kind of stable at the open, but still down 8% as it opened. Open Door and MP Materials appear to be climbing a little bit, and this is likely because of this new lockup that was just voted on and passed. That was yesterday. So a little bit of a modification here. Could be a sort of a temporary buy the dip moment there. Gary Gensler, chairperson of the SEC, does testify before the Senate at 7 a.m., so I'm sure we'll get some SEC news out of there. Somebody's spamming Smile Direct Club. A little bit of a push here. Okay, what else? Yeah, there's MP Material at that 4.6%. Roblox sitting at 83. Newegg 188. Lucid 348. Norwegian Cruise Lines 122. Redfin 114. Here's a firm. A firm is going down about 1%. Enphase. Ooh, Enphase turned negative. Down 1%. It's interesting. Is the SPY turning neg too, or what's happening here? Let's see here. Let's see what's going. Let's see how the market's reacting on the open market now. So Tesla's actually going up. Yeah, Tesla's up 0.81%. Good. Let's get a rally at Tesla finally, could we? Let's go to SPY. SPY's rotating down. Yeah, little bit chilling. Which firm? I hear ya. Yeah, Tesla's been slowly rising. I like it. A nice, slow and steady rise would be. I'm fine with me. All right. Okay. Let's see what other news there is. I'm going to go in the terminal for a moment because I'll tell you that the headlines that we were seeing at some of the websites, boring. Let me see if I could get this information on Macau because the gaming sector is getting killed a little bit today. MGM and so on. Here we go. Macau casino stocks sink. Okay. U.S. listed Macau casino operators Melco, Wynn, Las Vegas Sands, and MGM Resorts are trading lower after the Macau government said it's looking to increase the government supervision of casinos. The government aims to increase, quote, direct supervision in gaming companies to better monitor their operations. Authorities also propose to increase scrutiny on junkets, which service the VIP segment and extend credit to them. Oh, that's interesting. Government proposal also includes reviewing the number of gaming licenses and their terms. Okay. More regulation. Who doesn't love more regulation? I don't get it. Why would stocks go down on that? Kind of for what it's worth. Going to here. Let me pull this up really quick. Let's see. All right, so check this out. If you haven't done this before, it's kind of cool. So here, so you could visualize, this is where Macau is. So here's Thailand, Vietnam, the Philippines. Go over here to China, just above the South China Sea, outside of, where's Hong Kong? Oh yeah, Hong Kong's over here. So here's Shenzhen. You hear a lot about this one. Hong Kong. You know, isn't this Wynn Macau here? Let's see here. Let's see here. At least this is what comes up. Let's see. Yeah, here, Macau Wynn Peninsula. Wow, there's so many like ads going on this page here. I wonder if we can like take this little buddy. Oh, no, you can only get pictures in the area. How come they didn't do the? Oh, this is so cool. Look at this. I want to go here. Anyway, now you know. Okay, let's go back to stocks. All right, so let's see here. Wow. You're paying $5 Canadian to comment on my thumbnails? I don't know. I guess habit. Tesla slowly rising. Yep. Next rally in Macau. Yeah, right. Let's go. SPRT, that's support.com. The day of the merger, getting shorted more. I'm buying more and more, a little more and more greedy. Okay, little shorts. I think there are a lot of things that are beautiful about China. I agree with that. I've never been though, just from what you see. But then again, I could also have a deceptive kind of impression. Okay, so let's look at some of the things that are declining here, because there's not much actually like skyrocketing right now. FCell is doing well, but you know, Canoe, Lemonade. Okay, so you got a little bit of green over here. Hippo, our little hungry hippo. But other than that, look at this downside here. It's actually, you got some red. You know, ATAR is just momentum selling off, and so is support. But Wynn Resorts, 8%. We just talked a little bit about that. Lucid got a $12 price target, so they got burned a little bit. AMC is down 2.2%. GameStop's down 2%. Affirm's down 1.8%. Honest Company just turned negative. Honest was just up like 3%. Now it's negative. This is such a weird market. Wish.com down. Dave & Buster's heading back down. You know, they had great earnings. Great earnings. They ran like 14%. That was such a great swing trade. That was offset by a stupid move I made. I still made more money on Dave & Buster's, but I made a stupid move on Affirm. I bought a put before earnings because I was like 60+% sure they were going to sell down. And that was really just to hedge my position because I have a lot of shares in Affirm, ton of shares in Affirm. I think it's a great company. But yeah, Dave & Buster's, that was a really profitable earnings day. The thing swung like 14, 15% in 24 hours. This move right here. And dumped pretty much at the peak, but I thought it would hold longer than this. Matterport, this is a company that I just want to own for the long term, but I really want to buy again in this channel over here. Look, if it breaks below this channel, I'll obviously buy then as well. But yeah, this would be a nice channel to get back into right here. And historically, that's what we do. But then again, history is short. Enphase bounced hard yesterday. Yeah, it went down to like 154 and then went all the way back up to 160 yesterday. It was crazy moves. All right, let's look at the terminal and see what top news is. Because nothing else. I mean, we're getting a little bit of softness in the stock market. Let's see what the indices are doing really quick as well. Indice-wise, we're still green. The Dow Jones is up 92 points. The S&P is up 0.24. NASDAQ up 0.31. Russell's up 0.59. Dow's up 0.27. Everything's up. But we're seeing a little bit of a pairing of gains. Okay, COVID surge imperils small business recovery. Treasury curve steepens as CPI data takes pressure off Fed to act. Yep. Deutsche Bank trading picked up in August after muted start. Warren asked Fed to split Wells Fargo into consumer and Wall Street units. Oh, that's interesting. Why did you divide that? All right. Senate Democrats strike deal with Manchin on voting rights. Voting rights. All right. Okay, what is this? Seems like an interesting headline. Investors who made $4 billion from Tesla see extra 300% return. This is just like a historical thing. Yeah, this is just talking about the historical boom. Where is news, folks? Does anybody have news? We need some news. Quiet. Just quiet right now. Let's go back to some of the publications here. So we saw Wall Street Journal exposing Facebook. Democrats release details of proposed taxes. We talked about this yesterday. No, boring. Barron's? How's Barron's doing? Okay. Commentary. Danger ahead. Oh, I love danger ahead. Please let there be some danger so we can have some buying opportunities. And then skyrocket. Rose-colored glasses about China. Well, I mean, just because you're calling, areas of China beautiful doesn't mean you're making statements about the CCP. Gonna try to separate that one a little bit. All right, so let's see what we got over here. You ready for some bad news? Let's talk about bad news, or at least a bad article about things that could be bad. All right, the Fed is in deep, uncharted water. Danger ahead. Ooh, can we get some scary music? I feel like we need some background scary music here. That would just make this so much better, because if we could talk about this scary stuff here, but I really think in order to do that, we have to have some kind of tremble, something that's going to make us tremble a little bit, or I don't know what's here, trembling anticipation. Here we go. There we go. All right. Although Jay Powell delivered his all-important annual address atop a virtual Wyoming mountain, the Federal Reserve is nonetheless mired in the big money, the mythical river described in the high-impact Pete Seeger song, mobilizing the Vietnam War opposition. Okay, let's see here. All right, Fed policy has three key components, none of which have worked as planned. The post-2010 recovery was the weakest since the Second World War. Inflation constantly surprises central banks, and markets keep rising to troubling and sometimes disastrous highs, even as the U.S. economic inequality gets steadily more acute. The Fed has first relied on ultra-low interest rates set via longstanding open market operation. Okay, so where's the danger? Where's the danger? They talk about QE. Okay, safe assets. Even these fixes haven't worked as hoped. Oh, here we go. Here's their version of bad news. In 2013, markets trembled, so the Fed stepped in still deeper into the river, created an overnight reverse repo program to recycle cash from banks and money market funds. These are not small programs. Banks now hold $3.9 trillion at the Fed. That's true. The Open Market Committee, by the way, it's an interesting place where banks are parking cash because there's so much money right now, so much money. And we've actually just now seen the Fed overnight repo finally take less money. You finally started seeing an inflection point down. Personally, I thought that was actually a bullish sign for stocks, because to me, it was a little bit of a symbol that we've started taking money out of the banking system and actually seen a little bit of a turn down right here. But yeah, look, it's still insanely elevated. So it's not untrue that there are a lot of weird things going on. As it set in, okay, this is talking a little bit about path, the Greenspan put. Does the Fed like getting this wet and dirty? Of course not. It wants banks to lend out its cash for savings and its savings, not speculation, to ensure stability. All right, come on. Where's the argument here? I'm missing it. Normal rates, harmful for consumers, saving. That was boring. Sorry. We played scary music, but the headline was the sizzle that sold the steak, but the steak sucked. 10-year Treasuries just declined 1.3% now. It was 1.33 just a little bit ago. JP Morgan just made some 529 plans a lot cheaper. Amazon plans to hire 125K workers with starting pay at $18 an hour. That's pretty good. European stocks turn higher after CPI data. Nice. Treasury yields mixed. Yeah, well, we just saw them tick down a little bit. China has too many EV firms. NIO and Tesla are rising. Ooh, in Barron's. Let's take a peek at this here, why don't we? All right. China will encourage market consolidation in the electric vehicle sector, an industry it has nurtured for years amid bottleneck growth of greener transportation. In addition to improving charging infrastructure and EV mileage, China's EV sector must embrace the market. This will allow many small and scattered firms to concentrate their industrial practices. We have too many EV firms on the market right now. The role of the market should be fully utilized, and we encourage merger and restructuring efforts in the EV sector to increase market concentration. Wow, that's interesting. Shares of stocks like Li Auto dropped 1.4%. BYD fell 1.6%. See, that's the thing about the investing in Chinese stocks. You always have the Chinese government saying stuff that's just like I don't think you would ever hear about that in the United States. Could you imagine in the United States someone from the government coming out and saying, hey, you know, we should really have Google, Apple, Facebook, and Tesla own more stuff in America. We should consolidate more power into those companies because that'll be good for the market because we'll just consolidate power. That's good, right? Like, I feel like that is very un-American. Like, that would not fly here at all. All right, let's see here. That's it? Okay, a wise move by the Communist Party. Oh my gosh. Okay. Yeah. When you look around, do you really believe the USA is an example for anyone to follow? Oh, it's getting downvoted. I'll add to that one. All right, what else? All right. So, all right, what else? I don't know. Anything else? What else is new? We talked about Cathy Wood. Yesterday, we talked about inflation. Or, I'm sorry, about the infrastructure. Today, we talked about inflation. Bloomberg. Let's try that really quick. Quiet morning. But hey, you know what? CPI read was good. All right. What do we got? China locks down city of 4.5 million as Delta surges. I always think it's so interesting. China locked down a city of 4.5 million people in southeastern province of Fujian after detecting a dozen coronavirus cases. Not a dozen. All residential compounds, wow, and villages were closed off while leisure venues in the tourist city, including cinemas, bars, gyms, and libraries, halted operations. Libraries is a leisure venue? All right. Tesla probe. Ooh, what's this? Tesla probe leads NHT. Okay, get the ad out of here, please. There we go. All right. Tesla probe leads NHTSA to request documents from 12 car makers. The top U.S. auto safety regulator sent letters to 12 automakers as part of its investigation into Tesla's autopilot system and a dozen collisions at crash scenes involving first responder vehicles. Ooh, documents seeking a comparative analysis. Ooh. Amongst production vehicles equipped with the ability to control steering and braking under circumstances. Ooh. I wonder if we'll get any commentary on LiDAR. That'll be interesting. LiDAR and radar tools to potentially help. Stop. They don't have leisure activities in China. Stop it. Instead, we have Pelosi investing in NVIDIA. Nice. Oh, thanks, Ross. That's cool. Oh, the Financial Times. I do think they're a great paper. I do like them. Let me see if I'm logged in at the FT. Hold on. Let's see here. Okay. FT.com. Financial Times. Accept. The next big tech battle, Amazon's bet on healthcare, begins to take shape. I mean, that is interesting to me. I am curious to see what that looks like. Oh yeah, here's the Gavin Newsom thing. That's today. Oh yeah. See, look, hey, look, Financial Times, who hosts the real estate show on YouTube. Hey, it's not only real estate, financial. Change that to financial. Oh, who wrote this? Christopher. Come on, Christopher. Come on, man. You're in LA. You know. All right. What is this? The next big tech battle. Amazon's bet on healthcare begins to take shape. Let's see what Amazon's going to do. And I wonder if you can buy now, pay later for like medical services on Amazon by checking out with a firm in the future. Millions talk to Amazon's voice assistant every day with mostly mundane commands like play music or set timer for pasta. I mean, I've personally said set 11-minute timer, but I've never said for pasta. Does that like label your timer? Maybe it does. Huh. Learned something new. At Houston's Methodist Hospital, the very same technology instead here start surgery. Oh, that's interesting. Over the past year, a tie-up between a network of 8 hospitals and its cloud computing arm, Amazon Web Services, has led to voice activation being built into experimental operating theater. An experimental operating theater. Okay, powered by Alexa. The commands start running through virtual steps in the operation, allowing the surgeon to verbally confirm when he or she has taken certain actions, such as administering anesthesia. Oh, it's like your checklist. It's using my voice to complete those activities. There's never a step that's missed. Yeah, it's like a checklist. That's cool. Once it's completed, they write it as a completed activity. If there's an issue, something doesn't get done, there's going to be a notification. Oh, that's cool. Amazon's tech is listening intently. Digital voice assistant listening. Wow. System represents just one slice of Amazon's tools. Wow. Amazon, long assumed to be a sleeping giant in healthcare, is finally awakening. Its target audience is striking. In its breadth, the company is at once selling its healthcare credentials directly to consumers. Cool. Plenty of competition, big tech push. All right. Employees first. That's exciting. Not really. Okay. Let's go back to Webull. Where'd Webull go? Webull just crashed. We'll pull it back up. All right. Quiet news day after CPI data release. Let's see. Let's look at the indices. CNBC. All right. The indices just evaporated. Look at this. It was just like 10 minutes ago that all of these were up like 0.5%. And check this out. The S&P just turned negative. And the Dow is about to turn negative. Woo! And the NASDAQ and the Russell have also rotated to the downside. Not as much on the Russell, but wow, that's interesting. Let's go look at, oh, yeah, here's Hippo. It just automatically loads Hippo. I love Hippo. Hippo, that way. It doesn't matter to me. I'm hodling. SPY. Yeah, look at that on the S&P 500. Very interesting. That's incredible. So S&P's falling. Wonder what the fear is. Let's look at. So is Tesla down? No, Tesla's still up. That's very interesting. Affirm down about. It's down about 108. That's where I like it, by the way. Oh, Cardano is also down. Look at that. Yeah, Cardano 134. Let's go to BTC. Oops, BTC USD. BTC is hitting this line again here, 46.4. When lucid. Why are things sparking down? GameStop's at 1.4. Upstart, Dropbox, just a lot of things. Slightly red, but not horribly red. Look at Fuel Cell. Just out of nowhere started running. It's up 23% now. It's like it reported earnings and then all of a sudden became a momentum mover. Okay. Faraday. Neo up 2.18%. Nice. Piton 177. Etsy 16. Yeah, I mean, I don't know. Tesla, Enphase, these guys up. But all of a sudden, the S&P 500 just chillaxing a little bit. Treasury yields plummeting. Yeah, we'll look at that as well. Here, I'll pull them up really quick. 10-year line chart. Oh yeah, 1.29% right now. Let's go to the day chart. So what do we get? Oh, look at that plummet after CPI. That's good. It's good. People buying bonds again. Maybe more short covering. Yeah. Okay. Cool. Geez, yeah. I mean, very, very interesting market today. I mean, F cell's running, but otherwise it's just like tentative. I mean, you do have Palantir doing nicely, which is good. Look, that's a nice run on Palantir, finally. A little bit of love for Palantir. Yeah, that's good. Apple weighing down the indices. Is that true? Yeah, Kathy's been buying UPath for a bit. Apple's still up 0.2%. UPath? I think, isn't it UI? No. Or is it Path? Oh, it's Path. That's it. Yeah, Kathy's been buying Path as it rotates down. Wow, look at the sell-off there after earnings. Oh, jeez. Palantir is my only love. All right. So, yeah, interesting market. I am very interested watching how this day develops here. And we'll see if there are any buying opportunities. But Coupang, Hydro Farm, Win. Yeah, Win's interesting. I wonder if it's going to go back to $90. I think that seems a little overblown in terms of a sell-off. But hey, all right, cool. I don't mind opportunities in the market. But folks, thank you. Thank you so much for being here. Get your free start with Public, mekevin.com/public. Check out the courses, link down below. Price goes up at least 5.3%. I mean, we're going to have to follow inflation here on September 24th. And we'll see you in the next one. Thanks, everyone. Appreciate it again. And we'll see you. Goodbye. We'll do the course member live stream in about 15 minutes.